Your host, Jim Brown.
Hey, thank you all for joining us on the second hour of the Common Sense Show. Welcome to you new listeners all over America and on the World Wide Web. Glad to have you with us on this weekend looking at the news. I can't figure this out. I saw a story last week that says gas prices are dropping, and it's wonderful. I mean, they dropped, I think we've saving as much as $75 billion. Most drivers are seeing a $1 drop in the cost of gasoline at the pump. That's about a $750 savings per family you're going to save while these gas prices stay down, and it looks like they're going to stay down for some time. So the article said this: cheap gas means higher insurance rates to drive your car. What? You get much cheaper gas, your insurance is going to go up. What's going on here? I mean, I'm confused, and I didn't know what to do, so I called an expert that's been on our show before, Ken Davidson. He's an insurance industry expert in the Texas area, Dallas, Fort Worth, and all of Texas. His website, by the way, is on my website at JimBrownUSA.com. He's at EagleInsuredAdvisors.com. And I want to see what he can help me explain this and make some sense out of why, if your gas prices are much lower, why does your insurance go up? Hey, Ken, glad you joined us today on the Common Sense Show.
You bet, Jim. I appreciate you having me back.
Ken, you heard the question I posed, and a lot of drivers are saying, wait a minute, why is my insurance going up, especially if I don't have any accident? What's going on? So how do you correlate cheap gas prices with the fact that you're possibly going to pay a lot more for your auto insurance?
Well, it's pretty simple, actually. If the gas is cheaper, people are driving more. Some people are buying cars that maybe they weren't in the past. So more drivers, more cars on the road means more accidents, more frequency, and also the severity goes up as well. So I think that's really where it comes from.
Just that simple. There's more exposure out there, and so more wrecks going to happen. And yeah, so in fact, I think I saw some figures from the Associated Press that traffic deaths were up some 14% just in the first month alone this year, and that deaths on the highway could top 40,000 people. So I guess if you're sitting there selling insurance, you're saying, well, look, I'm glad gas is cheap, but we're going to see more accidents, more deaths, more damage to vehicles, and therefore we got to raise the rates. Is that simple? That in a nutshell?
That's pretty much it. I mean, I've read some statistics and some articles that already this year accident cost of claims are north of $150 billion, and that's about a 25% spike in the cost to cover and pay these claims over this time last year. So that's pretty significant. I will tell you, though, there's a lot of other elements I think that come into play here, and of course it's the economy, and the economy's strengthening, which is very positive. But as the economy strengthens, that means there's more people again that have jobs, that have the ability to purchase cars, they can take vacations, they're on the road more. So that has a lot to do with it as well. And then you look at, like when they raise insurance rates, it's not like an insurance company wakes up on Monday morning and says, oh my gosh, we've got to increase our rates, and they increase them on Tuesday. They have to file rates with the states, and they have to be approved. And historically, the rate changes they make are based off, information from a year ago, 2 years ago, 3 years ago. So you may even see what's happening now with the increase in the cost of claims and payouts affect us even further down the road. The other thing, too, real quick, is, the auto insurance business has been really commoditized. I don't know, think about the last time you watched TV or a sporting event and then you didn't see 2 or 3 auto insurance commercials. And the insurance companies have really commoditized this product, particularly the big captives and directs that you see all the commercials, because they're trying to buy up market share. Of course, they want to write as much business as they can, but that comes at a price. And that price is the payment for advertising. And then, of course, they get more claims because they have more customers, and then they have to be very competitively priced. So maybe in the past year it's a race, and they're trying to have the cheapest car insurance, et cetera, with the best coverage that they possibly can give you, but they just keep driving the prices down. Then you see all the insurance claims going up. They've got to raise their rates because they're going to have to be able to pay those claims. It's pretty simple.
Explain to my listeners, if you will, there and laying it out, Ken, you use the terms captive insurance companies and direct insurance companies, and that's lingo that is kind of insider lingo of the average person. Would you tell the average person what is a captive company? What does that mean?
Yeah, they're all great companies. So a captive insurance company is a company would be like State Farm and Allstate and Farmers. You see a lot of their commercials, and they provide great products. But they sell only their product. And then, of course, the directs is like Progressive and the Geicos and et cetera. Then you have the independent insurance carriers, which I'm an independent agent, so I represent companies like Travelers and Hartford and MetLife Auto and Home. And what you see is the captives are the ones you generally see and the directs all the commercials for. The independent market tends to kind of follow behind that a little bit. But the advantage is that people need to realize is, get with an insurance agent, an independent insurance agent. I recommend, of course, I am one. But we provide all kinds of options. So if you do see a spike in your auto insurance rates, then contact your independent agent advisor, and they can shop you around with all the different companies they represent. And maybe those companies they haven't taken such a significant rate increase because they haven't had, so much unprofitability in the past few years, or maybe they're not paying out as many claims.
Now, that's a good point. And, when you're the financial instrument called insurance is the only product you can buy where you don't really get anything in return that is tangible. If I'm in the bank and I buy a CD, my CD is there. If I buy stock, I got the value of my stock. But with insurance, basically, if I understand it, Ken, all I'm getting is a promise that if a certain event happens, I'm going to get paid. And therefore, if you don't have a very responsible, solid insurance company, then that promise may not be lived up to. And I guess I'm making your argument for you. That's why you certainly want to have an agent that that you buy over the internet or you buy on a telephone call. You're just dealing with someone somewhere in the country. And remember, all they're selling you is a promise where someone like you, number one, if my company's not doing good, I'm going to come on your door and beat on your door and raise Cain with you. And
that's exactly right. Yeah.
But don't you agree with me that when you're dealing with a promise, you need to do a little bit more checking than just going down and buying a CD at the bank or buying some stock?
That's exactly right. I mean, you got to figure out what are you paying all these premiums for every month, every year. You're paying for security, a peace of mind that you're paying for. If you get in an accident, you're paying for claims. And you hope that you're going to get taken care of. And you need to keep in mind that you don't want to sacrifice, what you're actually paying for to save a few bucks. Because if you have an accident or you get in an accident, like, for instance, Louisiana, they're always in the top 5. Michigan as well as the highest auto insurance rates. Well, there's a number of reasons for that, but one of them is because of uninsured motorists. There's such a high percentage of people driving cars in every state throughout this country that don't have insurance. And if you don't have an agent that tells you, hey, you need to pay an extra $50 a year and get this uninsured motorist coverage or underinsured motorist coverage because John Smith may be buying the cheapest policy out there and he hits you with your car, you get hurt. He's got really bare state minimum limits, which means that you're not going to really be able to take care of your medical bills, repairing your car maybe 100%, et cetera. And you need to have that additional coverage that your insurance company can kick in on. So it's a lot more than just saying, hey, I'm going to save $50 on my auto insurance. Well, $50, it could be $500, but if you don't have the right coverage, then you're just wasting your money.
No doubt about it. You get into an accident, even though you've got insurance, you're fully covered. The other guy doesn't. You have to go to your own insurance company to cover you for the uninsured motorist. And then we got so many immigrants coming, and we find that often don't carry insurance because they don't want to rattle the boat and show they're not legally in the country. So it's worth the problems. Got a couple more questions for you, Ken. I got to take a break. Can you just hold on for a couple more minutes?
Absolutely.
Good. Ken Davidson is my guest. He's an insurance industry expert. His company, Insured Advisor, Eagle Insurance Advisors, eagleinsuranceadvisors.com. We got some more insurance questions because it's a necessary evil. Freshen up your coffee, and I'll be right back.
Welcome back to Jim Brown's Common Sense. Now, here's your host and professor of Thinkology, Jim Brown.
Well, we're talking about a necessary evil today, and that's insurance. Nobody likes to buy insurance. I pay and pay and pay, and I never really make a claim. Then when I do, my rates go up, and insurance can be a real mess. We're trying to get some answers for you right now. We talked about auto insurance. Ken Davidson is my guest. He's an insurance industry expert over in Dallas. Eagle Insurance Advisors is the name of his company. His contact information is on my website at JimBrownUSA.com. Ken, we talked about auto. How about homeowners And I mentioned this earlier on the show in that first hour, the prolifera of new natural disasters that are taking place you've got to be concerned about. Say you're living in Texas, you've got to be concerned about drought, flooding, wildfires, tornadoes, hurricanes down the southern part of Texas. So, and it seems like we're getting more and more of this kind of exposure. Has there been any discussion, you think, about, if we just keep paying higher and higher rates? I've heard at one point something about a national disaster fund to kind of give you a reinsurance umbrella. But what's been your experience with the homeowners insurance? Can you still sell it to someone that wants to buy it? And what's the status of homeowners in Texas and really any trends you see across the country?
Well, first of all, I think the homeowners insurance premiums for a while, they were, a few years ago, they were a lot lower than they were. 10 years ago, I had what was called the 1% rule in many states where, you live in a $500,000 house, you're going to pay about $500,000 in insurance. That's about where Louisiana is, or pretty close to it. But, you do have to worry about the weather. In Texas, particularly up north, we have hail. And, a lot of the storms that come in, they're catastrophes, and they cost, millions and millions of dollars. And unfortunately what happens is you may live in an area where you don't have any severity with in regards to weather, et cetera, but the state and the insurance companies, they have to, offset that because they try to have a really good spread of risk so that maybe there's no storms in Austin, Texas, but up in Dallas, Texas, there's a lot of storms. Well, those rates can change across the state, and they have to maybe help supplement that. And if you're talking about coastal exposure, particularly like wind coverage, people a lot of times buy separate wind insurance policies, and all the insurance companies have to kick in for a percentage of the amount of insurance they write in that state to help support that fund should a natural disaster come into play. So you can still, absolutely, you can still buy home insurance. You got to have it if you got a mortgage on your home. So it's just good to go with get an advisor like we've got at Eagle. These licensed client advisors, they'll tell you this is what you need to do. These are the different carriers. These are the different coverages. And just make sure you have the right coverage at the right price. And it's still not, it's not too expensive, but, it's the most valuable asset you have. So, you got to protect it.
No doubt about it. Now, in the health area, it used to be pretty standard. Either you got the health through your company, which most people were lucky to do, or you had to go out and get an individual policy. And it was pretty simple to understand the options. Now, with this Obamacare that looks like it's here to stay, we can talk about repealing it, but you've got both houses of Congress up in Washington that are controlled by the Republicans, and no one's repealed it yet, and it's getting pretty well ingrained. If I come to you to talk about health insurance, do you deal with that at all? And if so, how do you advise people in this kind of uncertain and complicated market today to cover their basic costs of health?
Well, you just hit the nail on the head. It's so confusing. There's so many options out there, so we stick to what we know. We stick with property and casualty insurance, and we do a little bit of life, but we're more into the homes, the autos, and doing your businesses. But I'm a business owner, so I know, how expensive health insurance can be every year, how confusing. I would advise to find a specific person that does nothing but deals with health insurance and have them just take care of it for you. That's what I do as a business owner. If I was, it was just a policy for myself, that's exactly what I would do, and just put it in the hands of an expert and let them get you the best deal that you can. But I stay out of it just for the reasons you stated. It's just a little bit outside of my wheelhouse.
Well, what you're saying is you're an independent agent that basically deals with you strictly deal with property and casualty issues. So there are independent agents out there that just deal in health. Is that right? Where they will shop around and try to find you the best company to deal with, and how the federal umbrella comes in. And is that what you're saying? You can find agents like that?
Absolutely, yes. You definitely can.
Oh, good.
I highly recommend.
Yeah, well, that's good advice. That's good advice. So how about now, there seems to be is there a lot of consolidation going on in so many areas of the country? There's consolidation in so many businesses. How about insurance? There seems to be still a pretty solid number of big insurance companies in the country. That if I remember 15, 20 years ago, there was some consolidation. But do you have a number of choices to work with out there? Or are companies consolidating, and like they are in some industries and make it rougher? What kind of experience have you had with the choices that you have to go to place property or auto insurance, this kind of thing?
We have a ton of choices, whether on a national insurance company level or a regional one. We represent probably 50, auto and home and business commercial insurance carriers out there. There has been some consolidation. Most recently would be in the high-value, mass affluent market. Your companies that write, multi-million-dollar homes, $1 million and up. ACE Insurance, for instance, bought Fireman's Fund about 18 months ago or so, and they recently just bought Chubb Insurance. So when there was 4, giant big insurance companies that specialize in that affluent market space, there's really only 2 now. It would be AIG, their private client group, and then you have ACE, which encompasses Fireman's Fund and Chubb. But of course, we have access to all those markets. But there's regional markets, and there's some markets that we're fortunate to have that write real rural business, and they're farm mutuals, and we could You just got to, if you're an independent agent, you've got access. If you can get access to multiple insurance carriers, it gives the customers a choice. They have options, and that's really the name of the game. We don't, it's not, no insurance is a one-size-fits-all product, and it all should be custom tailored to each specific family and individual's needs.
Well, it's complicated business, and I think the best summary is what you started the show off with by saying that, you're going into uncharted territory that has a number of options as all these different insurance products change. So the best thing is find some reliable insurance agent you can deal with that can compare and answer all these questions for you. Is that pretty good advice, Ken?
You are correct. I mean, there's so many different homeowner insurance policies, what's covered, what's not covered. The state minimum on the auto insurance, that scares me to death because I don't think they're ever high enough. So I put it this way to a lot of my clients. If you break your arm, you try to fix it in your house? No, you go to a professional doctor and he takes care of it. The same goes for insurance. I mean, it's one of your most expensive costs per month and annually that you have to pay for. You've got your mortgage, you've got car payments, and you got renter's insurance, homeowner's insurance, and car insurance. So know what you're paying for, have an expert help you out, and take the hassle away from you. I mean, you don't need to be worrying about it. Go out and go play tennis or golf or have fun.
Which is exactly what I'm going to do this afternoon. Ken, thanks for being with us. Ken's my insurance guru. His company is EagleInsuredAdvisors.com. You can find all his contact information on my website. Ken, have a nice weekend. Sure glad you joined us. Look forward to talking to you again in the future.
Hey, I appreciate it, Jim. All the best.
Okay, bye-bye. Interesting guy, and like I say, it's a necessary evil. You got to have it, so you better do some checking around there, folks. Going to take a break right now. Coming back and talk about football and presidential elections on the Common Sense Show. My website, www.JimBrownUSA.com. Right back.